Hello, everyone. Welcome to the African Observation Community Webinar 8. At this point, I would let Edward introduce the webinar to us so we all begin. Edward, you're welcome. I like to think Edward is having a little bit of a challenge with his internet, so just go on 58 minutes, 15 seconds rather commercial, and then we'll be back as soon as he gets his internet sorted out. I like to think Edward is having All right, Edward, welcome. We can go on. To be sure, can the panelists hear me? Nancy, can you hear me? Eno, can you hear me? Eno, can you hear me? We
I
can
can
hear you.
hear you.
I can.
All right, welcome to
Yeah, I
the
can
webinar.
hear you.
I think Edward is still trying to get his. I'd like to begin with Nancy. Could you kindly introduce yourself to us and tell us who you are? And I'm sure by the time we are done with introductions, Edward will be on hand to address all the questions and everything.
Okay, hi everyone. Welcome to the webinar. My name is Nana It's. I'm a chartered accountant and an investment enthusiast, and I'm happy to share what I know with you. And I'm sure that by the end of the session, all take home some investment tips and learn something. Thank you.
Okay, let's go ahead to Enoch.
All right, my name is Enoch. I'm an investment professional. I work with First National Bank Ghana. I speak on personal finance and financial management. I do write articles that are published in the Business Financial Times, Modern Ghana, Sweet Melodies FM, and other news agencies and platforms. I'm a personal financial literacy advocate, and I'm very glad to be here this evening to share a few thoughts with you on personal finance or accessing financial advice in this digital age. Thank you.
Thank you very much, Enoch. Any more?
Hello, everyone. Good evening. My name is Inimwa Amwa Champon, a chartered accountant. And this evening, I'm going to be talking about budgeting. I'm looking forward to a fruitful session with my co-panelists. Thank you.
Okay, Crystal. Crystal, you're muted. We can't hear you.
Oh, sorry. Hi, everyone. My name is Crystal Kathleen Obing. I'm a chartered accountant. And this evening, I'm going to be talking about taxes with you. So, yeah.
Thank you very much, Crystal. Can we have Eunice now?
Hello, good evening. My name is Eunice Etonam Usu. I'm an insurer and I work with Hodder Life Ghana. And I'm looking forward to enjoying this session and also looking forward to educate the public and everyone. And I'm glad I'm here. Thank you.
Hi, Edward.
Yes, can you hear me now?
Loud and clear. You can take over.
Okay, all right, sure. Thank you for that. Sometimes these things happen. So, I think we've all done the intros, so we'll start right away. Once again, thank you all for joining in, and it's always interesting when we have experts and people that are very experienced in the finance and investment field come and share their insights and thoughts on issues that pertain to our everyday life. So, we'll start off with Enoch. Enoch is speaking on investment. How do you generate income from investment? So, Enoch, to start, Can you hear me?
Yeah, I can hear you.
Okay, all right, sure. I just wanted to be sure about that. So, Enoch, to start, I would want you to briefly tell us um, the reasons why people in Ghana do not really have an interest in investment. Having worked in the investment field for some time, what would you say is the reason why people don't usually like to invest in Ghana?
All right, Ed. Well, thank you so much for the question. I think this is one of the very interesting questions that I most often get, or people talk about why they don't invest. And the main thing that people say is, firstly, that the returns are too small. A typical example is how come, or is why most of the Ponzi schemes that actually come in do very well, amass a lot of wealth, right? We know of the BKM, we know of the what's the name? We know of the men's gold. We know of a lot of other Ponzi schemes that have come to take people's money. People have lost thousands and millions of CDs and dollars to these Ponzi schemes. It's because they expect an unreasonable amount of return from their investment. So they are not investing because they think that the traditional investment or asset classes that we have don't give a huge amount of interest like they will get from the Ponzi scheme. So that is one of the main reasons. And another reason is unaccessible information that they get on financial products. Most of them, all they know is put their money in their bank account, that's current or savings account, and basically that's it. Or the best they could go is probably purchase a T-bill. So these are some of the reasons why people don't like investing. Yeah. Thank
Okay,
you.
that's quite interesting. I find that interesting because it's more of the Ponzi scheme has come to sort of like kill the trust that people have in the genuine market or what really is out there. So because some
Yeah.
investments have failed, it's now making people think that all investments do not work. But I don't think
Yeah.
that's the case. So we'll learn more as we go ahead. So let's hear from
Sure.
Inimwa. When you speak of investment, one of the things that comes to your mind is you earning some income, you making some money, and then now you also have to spend that money. So a lot of time people do not have the right balance between spending and then their income. So Minima is going to be speaking on budgeting, especially when it comes to managing your income as well as your expenses. So anymore, how does budgeting affect one financially?
Okay, thank you, Edward. So before I go into that, I want to quickly explain what a budget is so that everyone here can actually understand. So when we talk about a budget, it simply means a summarized financial plan that helps you to compare and then also keep track of your income and then your expenses. So it's more or less like a tool. So that tool is going to help you to achieve your financial goals. So one of the ways in which budgeting affects us is that it regulates our spending. Okay, when you have a budget, you have a plan, so it's going to guide and direct you. So you don't just spend anyhow. Once you reach the limit of an expenditure or a category, you should either minimize the spending, or if you have, you may probably take the money from an additional category that will help you. So when you have a budget, when you prepare a budget, it helps to regulate your spending very well. You're able to keep track of your spending habits. Secondly, when you have a budget, you're able to provide an emergency fund or take care of an emergency fund in the sense that when you draw a budget, you need to categorize or look for, you need to apportion funds for emergencies because anything can happen at any time and circumstances can happen. So when you do not have a budget, it'll be very difficult for you to take care of these things because you may end up touching your savings because you do not have an emergency fund for that. And then finally, when you have a budget, it helps you to save more because at every point in time, let's say in a month, you have apportioned an amount of money to be used as savings. So every month consistently, you are putting that amount of money either in a fund or in an investment somewhere. So you are able to increase your savings. When you do not have a budget, sometimes you may overspend to the extent that you may end up not getting enough money to help you save. So once you have a budget, it also helps you to increase your savings. Yeah.
All right, anyone, thank you for sharing that insight. So, if you make some investment and then you earn your income, it's important to draw a budget so that you don't end up wasting that money that you have earned, and then you are able to also manage how you spend. So, thank you very much for sharing that insight. It's very important to understand this because a lot of people always say that they don't have money, or when they invest, they don't know what happens to their money. And many times you realize that they do make money, but they are not managing the money well because they are not following a strict budget that should help them. One of the things that I've also seen in recent times, or one of the things that I've come to appreciate, is the importance of protecting your money or protecting your assets. So that is why we have Eunice Etonam Owusu with us. She's going to be talking about insurance. When you think of protection, especially when it comes to finances, what comes to your mind is insurance. So, Eunice, can you share with us the misconception that people have about insurance? I, for one, did have some misconceptions in the beginning until I recently came to understand the importance of insurance. So, do you mind sharing with us some of the misconceptions people have of insurance?
Okay, thank you, Edmund. So when we talk about misconceptions in insurance, I was very happy when Nimwa was defining or explaining what a budget was and the need for budget. She made mention that you're supposed to have some budgets. When you're drawing your budget, you're supposed to make room for some unforeseen circumstances or eventualities. So this is when insurance comes in, because insurance is giving you protection against an unforeseen or an eventuality that may possibly happen, one which you do not have control over, or you can't tell when exactly it will hit you. But a lot of people, I mean, young professionals, do have misconceptions about insurance. For instance, they say it's for the aged. What do you think insurance is for the aged? Many people may think like that because they know, for instance, life insurance, they know that if you're aged and you are getting closer to your, I mean, to exiting, therefore you should need some form of insurance to take care of your dependents or your family behind. But it's not so, because you need insurance even when you are younger. This is because it's even much more cheaper when you are younger to have insurance, because at that point when you're younger, averagely you may not be suffering from any form of illness, or you may not have any condition that may even render you incapacitated or something. You are very strong. Averagely, an average young person who is planning his financial life will probably be healthy, working and moving about. So if you pick insurance at that age, it's at your advantage. Secondly, people say it's too expensive. They think insurance is expensive, one, because they haven't experienced it. If you go in to buy a life insurance or motor insurance or a home insurance, you realize that it's just a small percentage of the value which you are insuring either your life or you're insuring your property for. It's not expensive at all. For instance, with Hollard, we have a product called the Home and Content. You can pay as low as 30 cities for 20,000 cities cover. Just imagine. It means that the company is liable to pay you up to a 20,000 cedis should you make a loss with just 20 cedis. How expensive is that? I don't think it's expensive. We should all make the point to experience insurance. Someone will say, okay, I'm insured by God. God is my insurer. Yes, God is your insurer. But God that created us gave us something called wisdom and knowledge. He expects us to plan our lives with the wisdom and knowledge He gave us. So if you don't plan your life properly, and then you depend on the saying that God is your insurer, God is your protector, when it happens, when you go back to God, I'm sure if God could clearly speak to you and you could clearly hear, He would tell you, my son, you haven't taken the wise decision. I think these are some of the few misconceptions I want to share. Thank you.
Interesting. Thank you, Eunice, for sharing all of that insight. So, one of the things that I have picked up is in your budget, you need to have something like an insurance. Yeah, you don't prepare a budget without insurance. So, I think it's one of the things that we can all take note of, especially the participants that are joining us today. That make sure you have an insurance item somewhere in your budget that should cater for your unforeseen happenings or the things that may go wrong as you grow. Thank you very much for the insights shared so far. Now moving on, these are actually two things that I really have interest in: taxes and then retirement. And for everybody, these two things affect you one way or the other. Many times we play them down, but it does affect us, especially when it comes to the increment of taxes, and then when it also comes to you thinking of what to do when you are no longer working as full time, or you're no longer gainfully employed. So Crystal is going to be talking to us on taxes, and then we have Nancy also speaking to us about retirement, or plan, yeah, basically plan for retirement. So we'll move over to Crystal. And Crystal, can you tell us why it's important to understand what taxes are, especially the taxes that relate to the individual? A lot of people don't understand what taxes are. They think that there's no good in taxes, but I believe that there's some good in taxes, especially if you understand how it works. So, Crystal, over to you.
Okay, so employment tax is a tax that is imposed on the earnings of individuals. So your earnings being your salary, allowances, etc., etc. So even though as an individual, the employment taxes is not really your responsibility. It's up to your employer to do the deduction and then remit it to the GRA. But I think that it doesn't hurt to have the information. It doesn't hurt to understand how it works and what it's about, because I mean, knowledge is power. Having that information can save you from being shortchanged, intentionally or unintentionally, because our employees can make mistakes. I've had a situation where a friend referred someone to me, and the person salary had increased, and she felt like the deduction that the employer was taking was more than the employer should. And then I checked and I realized that was the case. And so it's very important for us to at least have some knowledge on employment taxes, so that in our as we go along, as our salaries increase and we are being deducted, we'll know whether what our employer is doing is right or wrong. And also knowing about employment taxes helps you take advantage of some tax incentives that are available to us. So yeah, I think it's very important that each and every one of us have some basic form of an idea of how our taxes are calculated and what it's about.
Thank you very much, Crystal. So that was very insightful, talking about taxes and how it applies to us and how relevant it is that we know a little bit about the taxes that apply to us, especially our personal income. Moving on right to Nanesi, knowing that retirement is a very important part of our life, since we will definitely stop working one day. How do you think an individual or retirement planning is important for an individual just before the retirement? What do you think about retirement planning? Nanisi, over to you.
Okay, retirement. Most people, it's such a scary word. But yes, so retirement planning is you taking steps, actually, more or less drawing goals as what are the kind of incomes that should be made available to you and your expenses during your retirement. So we all know that average in Ghana, I'll speak about the Ghanaian setting. Averagely in Ghana by 60, some people start at 55. 60, 65, 5, you have to retire. So at those stages where you are not in active service, or you are not, especially for those in the formal sector, you are not in active service, you're not employed. What sort of arrangements are you putting in place so that there will be still money coming into your hands? Or what arrangements have you been putting in place so that you manage your expenses then, you manage your lifestyle such that you not be spending so much, even though your income streams may be lower. That's you don't plan about your retirement. So retirement planning is just setting goals and objectives and taking steps. It's about your income and your expenses during the retirement ages. That's basic. So yeah.
All right, thanks so much, Nanesi. That was also very insightful, talking about retirement planning and how one day retire. I can see us all retiring, and the participants retiring soon. When I say soon, maybe 50 and 40 years plus. Anyway, that's just by the way. So I want to move on straight to anymore. So now you've spoken about budgeting, what budgeting is. Can you briefly tell us how budgeting affects other, like financial advice and our investment, our insurance, and every other aspect when it comes to our personal finance? How does budgeting affect those aspects of our financial life, please?
Okay, thank you, Enoch. So when you have a budget, it helps you to plan and then prepare adequately for these other financial services. Let's just take a scenario where you have a budget. So at the end of the month, you know how much you are earning, your source of revenue, and you know the required expenses that you have. It will be good news if you have a budget surplus. I mean, after you've taken out all your expenses, the main amount of money that you have left. Someone may feel, okay, because I have earned a surplus, I need to increase on my spending. I need to increase on, yes, your spending habits. But no, this is where it's an opportunity to invest in other areas or to look at other financial services whereby you can put your money in. So when you have a budget, it helps you to plan adequately for these other financial services, because if you do not have a budget, you may not be able to think of these things. You may think it's far-fetched from you, but no, once you have a budget, you can plan adequately. Every month, you know how much you should apportion for these. If it's an investment, it's a retirement plan, it's an insurance, once they are all in your budget, you know the exact amount that you're going to apportion. But then without a budget, you may keep spending and may forget about these things. So it's important that you have a budget so that you can think of these other financial services. Thank you.
All right, thanks so much, Enuma. So budgeting actually helps you to apportion, all right, according to Enuma, monies or your funds to the various financial services like your investments and your insurance and all other aspects of your financial life. Thanks so much, Enuma. So right back to Eunice. Looking at our participants and us ourselves, we are very young professionals. What are some of the different ways you think that insurance can help us, or what are the various types of insurance products that you think an individual, a young professional can take to, benefit or make his financial life better?
Okay, thank you, Enoch. So, just as I said, insurance is a basic need, I would put it. A lot of times we see it not to be necessary, and then we mostly, as young people, ignore it or deliberately take it out from our budgets because we think there's no need. But as a young person, you need insurance in so many ways. For instance, we have three main types of insurance. We have the general insurance, we have the life insurance, and we have the health insurance. And under the general insurance, we have the car insurance, property insurance, public liability, and so on and so forth. We also have under the life insurance, we have the personal insurance. That is insurance for yourself, insurance for your family, insurance for your dependents. And we also have the group insurance where employers pick an insurance for their employees against certain perils or eventualities. Exactly. So these are the types of insurance we have. Under the health insurance, you can have insurance against any form of illness or any form of accident that may render you hospitalization or something. It comes in to assist you financially when you have those problems. So as a young person, you can need insurance in so many ways, just as I've mentioned earlier. Thank you.
All right, thank you, Eunice. So we have the general life and health insurances, which are like the big or the three main categories of insurance products. And under them, Eunice has just made us to understand that we can take our car insurance, we can do our health insurance, life insurance, and all other insurance products to cover ourselves in case of any eventuality. Thank you so much, Eunice. So we are moving on straight to Crystal. Crystal, so far you've spoken about taxes, right? Now, how can one actually benefit from the taxes that he's paying or he or she is paying? Is there a way that an individual can literally benefit from the tax he or she is paying? Crystal.
Oh yeah. Yes, I mean the taxes that we pay, they end up with the government, and the government use the taxes to meet their budgetary demands. So they use it for projects, and they use it to keep the economy as a whole conducive for businesses to thrive. So I'll say we benefit, because if governments use your taxes to construct the road, it is your car that will pass on it. If they use it to construct a hospital, you go to the hospital when you're sick. And if generally the economy is doing well, your company, if you are working, if you are an entrepreneur, your business will do well. If you work for someone, the person's company will be doing well. And it's when a company is doing well, that's when an employer can say, oh, this year you've worked hard, and so I'm going to increase your pay next year by, let's say, 10%. I mean, you can be working hard, but if the economy or if the business environment is not conducive, your business, your company won't be doing well. And once they are not doing well, I don't see any employer saying they are increasing your pay when they themselves are suffering. So we might feel like we are not benefiting directly, because I mean, they are taking my money and I'm not seeing it, but we benefit in the long run. As to whether the money that is taken in this part of the world all goes into those projects, that's another conversation. But yeah, we benefit one way or the other, I'll see.
All right, thank you so much, Crystal. That was very nice hearing you talk about what's the name, taxes. COVID also just came, and then COVID has made us to believe that, or has made us see how important it is for the government to actually intervene when we are in crisis. We saw the government giving us free electricity and water at a point, but then coming back to take it from us as taxes. And in a way, the taxes have helped us to enjoy free electricity and water when we're dying need of it. And I think that was just amazing. Now to you, Nanesi. Now you've spoken about retirement planning. Why has it been very difficult for young professionals to plan toward their retirement? And how do you think, or what do you think is the best thing to do to plan for your retirement as a young professional?
Okay, so as young professionals that have started work maybe less than a decade, I think that one of the main issues or misconceptions is that, one, they are earning so little. So some people will say, I'm earning very little, maybe less than 1,000, and I don't think that it is time for me to set aside money for retirement purposes. But this is very wrong, I would say, because you wouldn't enjoy the benefits of compounding. So if you set money aside when you're younger, the interest will compound, and it would be something, it would be bigger than you, like the seed you were younger. Again, people think that retirement is far away. So let me just bust the bubble. The thing is, if you are, say, 30 years, you have 30 more years to retire. But let's put it into monthly calculations. So let's say 12 by 30 is 360. So you have 360 more salaries to draw on, all things being equal. That is, if you're going to work until age 60. If you are 28, it means you have 384 more salaries. So as the months go by, remember that you are drawing in the number of times you're going to have money from your employer. Sorry. So that's some of the things that gets young people thinking that, oh, retirement is far away. I'll start investing when I'm a little older. Again, people do not know about retirement at all. They just heard the word, but they don't know about planning for it or preparing towards it. So genuinely, people do not have knowledge about retirement and even what to do, even if they have knowledge and the fact that they're supposed to save. They don't know some of the packages, some of the investments that they can go in to help them during their retirement stages. Another thing is that people think about retirement, and the only thing they think about is the fact that SNIT will pay them. But when you see the last SNIT analysis, some people are earning very, very small. I don't know how people survive with some of the allowances that they receive during SNIT. And again, the other thing is that during your retirement ages, those are the times that you have a lot of your joints hurting. So you have more, all things equal, you have more medical expenses then, especially if you're not taking care of yourself now, have more expenses then. So people just think about the income part, but they are not thinking about the expenditure part, the expenses. They always think about income, income, income when it comes to retirement planning, forgetting the expenditure part. So in summary, I'll just say that one, people think that their salary is too small. If you think your salary is too, if you don't form the habit now, you might never, never ever save towards it, and you will not enjoy the benefits of compounding too. If you think that it's far away, remember the calculation I just gave out. Multiply and subtract your age from 60. So if you're 28, you have 384 more salaries to draw on. Even if you keep a CD every month, for that 384, it means you have just 384 to live on for your retirement, apart from your SNET. So just think about that. Three, know that there are a lot of platforms, if you lack knowledge of it, like the OA app, where you can know a lot of investment strategies or investment tips and some of the things that you can go into, whether it's a mutual fund, whether it's stocks, etc. And four, remember that when you're doing your investment planning, it's not just about your income, your expenditures. That's what I'll say.
All right, thank you so much, Nanesi, for that insight. I'm back. My internet was messing up a bit, but I think that I left you all in good hands. So we'll go ahead and we'll hear from Enoch himself. Enoch, can you tell us how we can generate multiple streams of income towards creating wealth? People always want to earn more than their usual salary. So, what are some of the things that one should consider if they want to get more income?
All right, thanks so much, Edward. I'd like to be very holistic in my submission here, not limiting it to only financial assets, but also to businesses as well, because I think it's very important because once there is a business, most definitely there's going to be an income some way, somehow. So basically, talking about financial assets, you see, the thing is that as an individual, you don't necessarily have to always be working for the money. Talk about people providing services. Once they are not there, there's no money. A barber like this, once he's sick, there's no money coming anywhere. A seamstress, once he's sick or she's sick, there's no money coming. So you want to think about how to make the money work for you. So in doing that, you want to invest your money in financial assets. So whilst you are sleeping, your money is actually working for you. How does that happen? That's how come we have many financial assets or investment products. Thanks be to God for what's the name, the financial services sector that we have with our asset management firms introducing a lot of financial products like the mutual funds. Even that one, there are categories like the equity, the balanced, and the money market. So based on your risk appetite, you definitely have something to invest in. Right now, we are moving straight into cryptocurrency. Whether you like it or not, it's actually something that is coming to revolutionize our financial services sector or the world or the finances actually. So you want to take advantage of crypto, you want to do some mutual funds, you want to invest in a fixed deposit or a treasury bill based on your risk appetite. So those are some of the ways you can make your money work for you. Aside that, I believe that each and every one of us have a passion or have passions or have gifts. Excuse me, but I'm a pastor. The Bible says that a man's gift maketh room for him. So definitely, if you have a gift or a passion that is not making room for you, it means that you're actually not using that gift. So I believe that we all have passion. It might be that you write a lot, right? You can make money from writing. Who told you that you cannot write an article that can be paying you a certain amount of money every month till eternity or till you die or something? You can always make money from whatever that you are doing. So once you have a passion, also you want to monetize your passion. Don't always be doing it for free. A time must come where you monetize your passion, start that business that will generate some income. You are working 8 to 5 job. Do something on the side in between, a side hustle. Just do something that will bring you more income, because the money you are receiving right now would never be enough for you. And should they even increase your salary, it will still not be enough for you. So get an additional source of income. Thank you.
All right, thank you so much, Enoch, for the insight shared. You've mentioned a number of options or a number of investment opportunities that people can take advantage of. You've mentioned mutual funds. You've mentioned fixed income or fixed deposits. You mentioned cryptocurrency, which is quite a new financial asset, and it's making a lot of waves around. And then you also mentioned your passions. That is, if you have some kind of skill or talent that you can leverage on to also earn income. So to our audience, you heard Enoch as he mentioned all of these things you can take advantage of. So if you are earning some money, I mean, as by way of your salary, at the end of every month, you should make sure that you put some of that money into some kind of investment. You can buy mutual funds or fixed income at any investment firm or even your bank. And then this webinar is actually an initiative of an app called the African Observations app, or the AO app. So on the app, you can see a lot of opportunities in terms of investment, whether it's fixed income, whether it's mutual funds, whether it's even stocks. You can see a lot of opportunities that you can also invest from. So you can get the app from the Play Store or the App Store, African Observations, and see all the opportunities that you want to take advantage of. So now let's hear from Enimwa as she speaks finally about budgeting. So Enimwa, how should one draw a budget? What's the best way to draw a budget and stick to it after you have decided to invest your money and then you are now earning some extra income? How can you draw a budget so that you can stick to that budget? Yeah.
Okay, right. Thank you, Edward. So there are a number of mediums you can use in drawing your budget. You can use an Excel sheet, let's say a spreadsheet, or you can use an app, or you can go the manual way, the old-fashioned way, using a pen and a paper. However, it's important that you look at some steps, some essential steps that can help you to draw a proper budget, especially if you are using a spreadsheet or you are going by the old-fashioned way of using a pen and a paper. So I just want to mention a few of the steps that's important for us to look at when we are drawing budgets, especially when you're using a spreadsheet. So before you draw a budget, you need to visit your history. So how do I visit my history? You can look at your bank statements or your Momo statements. That will guide you to know the kind of expenses that you actually incur. So you know, okay, so in a month I spend on A, B, C, and D. When you are done, then you now calculate your income. So you check how many streams of income do you have, then you list them up and then you can put them down. Now you need to also list your expenses. And these expenses come in two ways. You have your fixed expenses and you have your variable expenses. The fixed expenses are the ones that have an exact amount of money. So for instance, your rent, you may be paying an amount of money every month for rent, and it could be your savings. You have an amount of money that you have apportioned for your savings. So when you get to know these things, you can also then total your income and then your expenses. So we've looked at listing our income, also listing our expenses, now dividing them into variable and then fixed, and then we now total them to see if we are making a surplus or it's a shortfall, or we are making, I mean, we are overspending or our expenses are more than our income. So that will help you to know what to do, because when you realize that your expenses are more than your income, then it means that you need to cut off some activities or some spending. You need to reduce on certain things that you do. Probably if you eat out more often, you have to reduce it so that you do not overspend, because it will affect you. You may end up going to touch your savings and all that. One way by which we can stick to our budget is by constantly monitoring and then tracking our budgets. What you can do is that if you have a spreadsheet, you can constantly be recording your expenses. So maybe in a week, on a weekly basis, okay, so these are the things I spent on. Let's remember that when you have your expenses listed down, you need to add values to all of them, apportion. So if it's transportation, you know that in a month I'm spending, let's say, 300 cedis on transportation. So if in a month you're in the third week of the month, realize that you are getting close to the 300 cedis, probably in the second week, you need to probably reduce it. So maybe if during the whole week you were picking an Uber or maybe picking boats, you may have to probably reduce it in a certain sense so that you do not overspend on that aspect of the expense. Because when you overspend, it's going to eat into other um, categories. Also, what you can also do is that when you draw the budget and you realize that probably you are nearing maybe limit you are nearing the limit of an expense, you may want to take additional funds from other categories that you have listed, but ensure that it doesn't lead you to overspending. So critically keep an eye on your budget. Don't just prepare a budget and then sit somewhere and think that it will work magic for you. No, you have to constantly visit your budget. Also, once in a while, probably after 6 months, review your budget, because our priorities change, circumstances change. You may marry, you may have children, so your expenses may change. So if you have and expenses, maybe you listed an expenses when you were single. Once you marry, they are going to change. So you don't use the same budget you have been using. So it's important that as you monitor and then track your expenses, you also review your budget so that if there's a need for you to make changes, you can make things so that it can be in alignment with whatever you are earning. Yeah, thank you.
All right, thank you, Enimwa. I love that submission as well. So, when you take the advice that Enoch shared with us and you invest your money to earn some extra income, always make sure to get a budget that you can use to track how you spend your money, so that you don't end up spending the profits or the returns that you have earned from your investment. A lot of people invest and then after 2 or 3 months they go back and then withdraw from the investment that they made. There are also people that always go out on a Friday. I know a couple of guys that every Friday is a day for chilling. And as you start to like make your budget, you should always see how best you can track all of these things. And like anyone said, you don't want to spend and end up spending your profit or your revenues, or else you'd always be in debt. Thank you for that submission in Nimwa. And now we'll talk about insurance. Very important. How can you protect your money, or how can you protect your assets and then your income? You may have invested some money, you may get some profit or some returns, and then somewhere or somehow you hear that a very important person in your family has lost his or her life, or you may end up having an accident and you have to just find money from somewhere. And this is where insurance comes in. Recently, I had I have a car that I use for Uber, and then the driver called me one time and told me that he had an accident. And when he told me about the accident, all I thought about was the insurance that I had. I actually paid for, and I thank God so much, because if not for that insurance, I mean, it would have been hell. The insurance company catered for the cost of repairing the car, and it made me realize how much important insurance really is, and even for life insurance. So I would allow Eunice to speak. So Eunice, tell us, what should one consider if they want to take an insurance for a young professional who has maybe started work, or someone that is maybe in the peak of his or her career, or maybe the twilight. What are some of the things that you should look out for? Whether it's life insurance or motor insurance, whatever kind of insurance that you should consider, what are some of the things that you should look out for?
Okay, thank you very much, Edmond. So in planning your financial path in life, I think you'd have to, after you have considered taking insurance, you'd have to look out for so many things. Firstly, you have to look out for your affordability. When I say affordability, what I mean is how much are you ready to spend on your insurance? That takes me back to Enimua's budget. So if you have it in your budget, you should have an amount laid down for insurance. So if you look at your salary, that one will also guide you, or look at your income, it will also guide you on how much you have to spend on insurance. You must put a percentage. So if you want to get an insurance policy, you should check out on how much I want to spend. What do I need to spend on? Which type of insurance do I need? That's secondly, the need for the type of insurance. So as a young person, you ask yourself, I have a car that takes me to and fro work. I need insurance for it. I need insurance for myself. I need funeral insurance for my parents and all that. Those are the types of insurance you should be considering. So when you look out for the need, it would also, I mean, shape your drive towards what type of insurance to pick. That's secondly. Thirdly, you must also look out for which insurance company do I take the insurance from, or which broker do I buy insurance from. You should look at the sovereignty of that insurance company. You should look at how strong they are, whether they are in good standing or they're having issues, blah blah blah. You should investigate to understand the company that you're picking the insurance or buying insurance from. And by way of doing that, you can quickly refer to National Insurance Commission's websites and other insurance platforms to find out, or you can even speak to a professional or work to an insurance company to find out the type of insurance product they have and then how sovereign they are, how strong they are. I mean, their past experiences, you should be interested in that. How experienced are they as a company? When I talk about experience, it doesn't only mean how long they have been in existence, but what are the types of circumstances or situations they have faced and how do they go about it? For instance, I would like to talk about Holland because that is where I work in. Then I have had a lot of experience on the job. So coming to Holland, because we work in about over 16 countries, we have a lot of experiences. Every product we bring on the market is actually tried and tested in one of our sister countries, one way or the other. So everything that we serve to our clients is actually one that we know the client needs and then would help the clients. So as a young person, you should be interested in all these things before buying an insurance product. Thank you.
All right, thank you so much, Eunice. I like your point, especially when you speak of affordability. I don't mean to advertise for Holland, but Holland is one of the insurance companies that I do trust a lot in, and I do have some policies with them. And like she mentioned, you we would not make a decision about insurance, especially looking at your salary as well, and then what kind of insurance you want to go for. And one of the things that I've seen is that usually the premium that you pay is a function of a lot of things, like maybe your age, and then if it's a vehicle, the value of the vehicle and all of that. But it's important to sometimes compare prices here. So I did that and I realized that Holland actually has some of the very good rates around. So um, it's important to check whether the insurance is affordable, because I know a lot of people that go for insurance and then they can't even pay the monthly premiums that they have gone for, or at the point they stop paying the monthly premiums that they have gone for. So one of the key things to look at is how affordable the insurance is. The experience of the insurance company is also very important. And for me, one of the things that I always say is the customer service. Yeah, I would want to go with an insurance company that would listen to me, that would hear me out when I have a problem. So I remember I did visit Holland one time, and I was quite impressed with the service that I received. So it's an insurance company that you can actually check out. Always do your background research before you make a decision on what insurance company you're going with, whether it's the experience, how affordable the premium is, and then even the customer service as well. It's very, very important. So thank you so much, Eunice, for that insight as well. We'll move on to Crystal, yeah, who speaks about tax. So, Crystal, what are some of um, the taxes that a young professional should be aware of, and how can one use these taxes to the advantage? So, when we speak of taxes, what are some of the taxes that I should be aware of as a young man coming up? And then how can I use some of these taxes to my advantage? I remember back in school, I came across some taxes or some incentives, tax incentives like maybe education and dependency and things like that. So can you throw some light on some of these things for us, Crystal?
Okay, so tax incentives are basically given to us to reduce our tax burdens. And as individuals, there are a couple of more than a couple. There are some tax reliefs or tax incentives that are available to us, but unfortunately, most of us do not take advantage of some of them. So the first one I'll talk about is pensions, the one Nanisi spoke about. So on a monthly basis, we get a relief for the SNIT contributions and other the tier 2 and tier 3s that we pay to registered pension funds here. So that's one incentive we get on a monthly basis. I think that's one of the incentives that most employers give to employees. Yeah. There are also others that a lot of people probably know about or do not know. Some people know about them, but they feel like the benefits are not too significant, so people don't take advantage of it. But I feel like little drops of water makes a mighty ocean, so we can take advantage of some of them. So I've listed a couple of them, so I'm going to go through. So we have marriage or responsibility relief that is given to someone who has a dependent spouse or someone who takes care of two or more children. So on in the law it says someone who has a dependent spouse, but in reality what I know is that once you are married and you can show your marriage certificate and prove that you are married, you have a tax relief of 1,200 cedis per year. So that's like 200 100 cedis a month. And people feel 100 cedis a month will not really do anything to my salary, so people don't take advantage of it. But that's one of them. There's also child education relief. So if you are young, you started having kids, you are able to claim up to 3 kids, and it's just one partner that is able to claim. So if you claim, your husband cannot claim, and if your husband claim, you can't claim. So that's also another, that's 600 per child per year. So that's also not so much when you look at it on a monthly basis. But let's assume you're married and you have kids. That adds up. There's also one disability relief for individuals with disabilities. They have up to 25% of their income, be it from employment or from business, given to them as a relief. So that's also one relief such individuals can take advantage of. We have old age. Since we are talking about young people, it might not apply to us, but in case you know anyone who is about 60 and still working, they have up to 1,500 cedis a year as relief. So when I say relief, it means that when your employer is calculating your taxes, when they add everything you earned, they'll take these amounts out before they apply the tax rate to it. So in essence, you pay less tax than you ordinarily would have paid. Okay, so we have age dependence relief. That also is when you have older people above 60 who are dependent on you. You also get 1,000 cedis as a relief per year. And then we have educational relief. That's one thing that I don't think a lot of people also take advantage of, and that applies to people who undergo training for professional, technical, or vocational skills. So as I use myself as an example. So because I work in an accounting firm, um, doing a professional course is mandatory. So I took a professional course, ACCA. So I could have applied for this relief to get 2,000 cedis per year as a relief, just because the course that I was taking is related to the kind of work I do. So if you are into vocational skills, I don't know about any professional or vocational exam that I can use as an example. So, but if you are into vocational skills, take an exam or you undergo any training related to the vocation, you can also take that relief. But unfortunately, a lot of us don't take advantage of it. I didn't take advantage of it. Well, because my employer maybe that's why. Then another one is mortgage relief, and that is also a relief that an individual gets for the interest that is on a mortgage that you take. So we know, I'm sure we all know, but mortgage is a loan that you take for a building or a house. So yeah, if you take such a loan for a building that you're going to live in yourself, and the building is going to be in your name, not that it's going to be in someone's name, but you are going to live in it, has to be in your name. The interest that you pay on a monthly basis on that mortgage is deductible, so you get a relief for that. But with all these relief, you have to apply for it. It's not automatic that once you have a mortgage, automatically your employer should be giving you these deductions. You have to apply for it. Yes, so for the mortgage, there are some conditions you have to meet. Like it has to be for residential purposes. You can't, if you are using it for a commercial purpose, it doesn't apply. It has to be situated in Ghana. The loan has to be in Ghana cedis. If it's in another currency, they are going to convert it to Ghana cedis. Yeah, and the likes. So yeah, that is some of the reliefs available to us as employees.
Okay, all right. Thank you so much, Crystal,
Yeah.
for that as well. It's quite interesting the release we have, and I think a lot of people do not even know about some of these things, or they don't even take advantage of them. So, having shared this, I believe that we would become more aware and take advantage. So, we are far behind time, so I would want us to quickly wrap up. We always want to have this webinar within an hour so that people can go back and rest for tomorrow. So, we'll take Nanesi as our last speaker and then a few questions that have come in. So, Nanesi, the question for you, or basically, the last thing that we'd want to hear from you is, what's the best way to approach retirement planning? What's the best way to approach retirement planning?
Okay. Um, I think the best way to approach your retirement planning is to know thyself. So, even with your current lifestyle and the lifestyle that you assume or you're preparing to live during your retirement stages, what are some of the things that, or some of the expenditure or incomes that you're expecting during your retirement age? Apart from, normally in Ghana, the steps. Apart from the steps, what are you putting in place in terms of your income? Are you going to put up a side business? Do you have any other business? Do you have a shop? What are some of the things that you can do to make extra income? And the insurance experts here, I know that especially for the life insurances, they have this savings package that looks like an insurance as well. Maybe they can educate us where you can save towards maybe X amount in the next 30 years or in the next 20 years. So, what are some of the packages that you want to based on your savings and based on maybe the insurance packages that you're taking? Again, at your retirement age, are you going to, or your retirement age, are you still be going to rent? So retirement is not just the things that you're going to do at that retirement age, but maybe now you want to take a mortgage or now you want to start building so that at that stage you still not be paying rent. And again, there are things like your medical expenses. There are life insurances that can secure you your medical expenses during your insurance package that can insure you towards your retirement age medical expenses. As Eunice said, normally when you wait till you are 55 before you seek such a package, the premium is big. You don't want to wait till then. It's better you start now. Again, are your parents still alive? Death is inevitable. So you want to maybe get a funeral package for that time. Are your children, how young are your children? Will your children still be in tertiary or high school when you hit retirement? Their school fees need to be paid. So are you going to get an educational insurance package for them? So you have to know yourself. Of the what are some of the things that you are spending on now, would they still be there at your retirement age? What are some of the even now, is your income enough? Are you going to set up a side business? How sustainable is that? So you have to look at the best approach is to know yourself. Know, as Nima said, it's based on your budget that will help to know yourself, because it's your past that will tell your future, obviously. So if you know how much you're spending now, you're able to calculate how much you would spend during that time. And when you say with investment experts, they normally help you know the future value of your current expenditure and income. So you know how much you need then. And one thing I love about insurance, I love insurance. One thing I love about insurance is, especially with life insurance, you can have multiple of them, because like your life is very valuable. You cannot put value to life. So unlike other insurance packages that you can have just one, when it comes to your life insurance, something that you leave behind for maybe your children or your legacy, you can have multiple of them. So sometimes instead of just the assets, putting up a house at, I tell people, instead of putting up a house at a village where your children will not stay there, why don't you put it into different life insurance that when you are dead, they have a huge lump sum of money to do something for themselves. Again, there's one thing, although we are not talking about misconceptions now, I want to just put it in. Some people think that they are investing in their children so that during their retirement stages, their children will take care of them. Ghana is hard at the moment. If you are waiting for your child to work and come and give you some of the money for insurance, I'm sorry. Like, you think your child is a very stingy person, but that's not the case. We invest in our children so that they can take care of themselves when they are older. You're not investing in them so that they will take care of you. That old adage thing, yes, it's out of goodwill, but really practically now the way the world is going, it is not supposed to be. So invest in your children, yes, but so that they take care of themselves. But investing in your children so that they take care of you, it is not a sustainable investment, because children also will have, you put them a lot of pressure on them. So instead of them to just like explore various occupations and things that they have interest in, now they have to go into things that they know will bring them money now. So please, parents, take it easy on your children. But saying that, in summary, you have to know yourself. What are your expenses now? What do you envisage your expenses to be in the future? And what's your income stream? Your SNIT, how much do you think, if they're taking the best salary in the last 3 years, how much you pay? Do you think you can live on that salary each month? Sit with your insurers. Don't leave your life insurance out of the plan. Sit with your insurers. They have wonderful packages. I think that we haven't tapped into the insurance benefits that come for young people. If you start now, maybe you'll be just paying fees a month, and they'll give you 100 million Ghana CD at your retirement age. And it is possible. If you sit with them, they're able to do tailor-made ones for you sometimes. So sit with your life insurers, sit with your your investment experts. Use the apps such as OA, learn about mutual funds, learn about crypto, learn. Like, you have to learn and learn and learn and explore some of the insurances, because it's sometimes based on your experiences that you know which one is good for you. So the best approach is know yourself and take the advice I've given to you. Thank you.
All right, all right, all right, all right. Thank you so much, Nanesi, for that wonderful insight and breakdown. We have quite a number of questions. I don't think we can take all the questions, but I would just want to mention a few of them. I think some of them have been answered. So someone was asking about the tax incentives for a young person or for entrepreneurs. So I don't know. I think Crystal mentioned briefly about tax incentives for young people. Unfortunately, we can't really speak about the tax incentives for businesses because today is really about personal finance. So I'm sorry about that. But if you want to really know about the tax incentives of businesses, you can always get in touch, and then we would create an opportunity for you to speak to Crystal. Another question came in about insurance. Okay, so I don't know if this is a question. Let me just read it. Eunice can maybe address it for us. So someone is saying, I feel a lot more people are not subscribing to insurance because a lot more people do not get their claims when they put in their request, or perhaps it takes a long time for their claims to be processed. Eunice, can you say something brief about this so that we move on to the next question? Something very brief.
Okay, thank you very much. So about that question, I'm happy he didn't say they don't get their claims at all. But he in the second line he said they it takes too long for them to get their claims. All right. So the reason why one they may not get their claims at all is based on so many things. I can't mention all, but there's one thing you shouldn't do as an individual taking insurance. Don't default. Anytime I go and do presentations to individuals or companies, I tell them the monies that you pay on a monthly basis, on a yearly basis, is the binding instrument you have with the company. Okay, and that is legal. So as soon as the money isn't coming in, there's no cover. So somebody would pick an insurance product, let's say a life insurance for himself or a policy for his parents, and then wouldn't pay along the line, or would have some defaults along the line and wouldn't come and pay arrears. And then when the event occurs, that is probably when the parent passes on or there's a claim, and then he comes around, he forgets that there were months he didn't pay. But with Holland, I can speak for Holland. Mostly, if you cross the waiting period and there's a claim and we realize that there are some defaults, we are kind enough or lenient enough to sit down with you, pull out your statements, and then look through and look at the months that you defaulted and probably come into an agreement and deduct it from the total amount, which is the sum assured you're about to take. Even with that, every month when you don't pay your premiums, we send you prompts, we send you alerts via email, via text messages. So you get to know the status of your insurance. And then secondly, he said it takes too long. I can equally speak for Holland. Our claims takes maximum 48 hours. That's an individual claim. 48 hours maximum to get your claim if all documents that you're supposed to bring or required of you is provided. Then I come down to what documents do you need. For instance, life insurance. The first document you may need for life insurance in general is the evidence of death, which could be your medical certificates of cause of death. For that certificate is given immediately when somebody passes on in a hospital before touch wood they put the is it the bed sheet or the blanket to cover that dead person. The doctor issues a medical certificate of cause of death. Secondly, you can get a death certificate that is from the death and birth registry to make a claim. So if you have these documents, in addition to the person or the deceased ID, which shows that Kwesi Menu that you are claiming for is exactly the Kwesi Menu that you insured. With these two documents, within 48 hours, you should be able to make a claim from Holland. It's automatic. For that, I can speak for. So basically, these are some of the things that we should be doing and should when we want to make successful claims. And in insurance, don't lie. Please don't lie. If you lie about some information to give us from the beginning, at the end, it will turn back and affect you. For instance, lie about your age, lie about the person you're insuring. As human as we are, if we do not streamline our processes and make them very clear, you see people trying to, abuse the system, trying to take advantage of the system. That is why sometimes we tell you that you need these things to be able to make claim, and you should know. Ask questions when you're buying insurance. Do some form of research. Don't just buy insurance because somebody met you on the streets. No, understand. Take time to understand and ask a lot of questions, and I think that will help. Thank you.
Okay. All right. Thank you so much, Eunice. One more question to that. So what if someone has arrears and the person pays on a later date? Does it affect the person?
Okay. So if you have an arrears on your life insurance or on your motor insurance or any form of insurance, it shouldn't affect your sum assured or whatever amount promised you at the end of the day. You see, because it is monthly, so first there's a period called the waiting period. On every life insurance product, there are waiting periods. So, for instance, let's say a life insurance product having a waiting period of 6 months. As soon as you undergo the waiting period successfully, that is, you have been with the company for at least 6 months and constantly pay, anything should happen after that. You should be eligible to make claim, unless, of course, your policy has become inactive and has been taken off the system automatically because payment wasn't coming. But if the payment is still coming, there's a period that most insurance companies give for default. For instance, 3 months default. Some give 2 months, depending on the company. So if you have, let's say, 2 month default, they can reinstate your policy. That is, bring you back on your policy for you to pay the outstanding or the default, and then you continue as if nothing happened. That's why I was saying I can speak for Holland. So far as you've undergone the waiting period, and then you come to us and you want to pay, you have some 1 month in between, 2 months in between, a year you've not paid, we can sit down and then we do those calculations and we take it out from the claim that you're about to receive and give you the remaining amount.
Okay, all right. Thank you so much for that. Someone is asking about cryptocurrency. Unfortunately, we're not talking about crypto on this webinar. We had the previous webinar, that is our community webinar 7, was about financial markets, and we looked at cryptocurrency. So if you want to really understand the cryptocurrency, you can watch that webinar on YouTube, and then get all the information you need on cryptocurrency. One more question, and then I think we can call it a day. So this is to Crystal on taxes about reliefs. Can all of them be deducted from your total emolument? Someone is asking that. Can all your reliefs be deducted from your total emolument?
Yeah,
That
it
is
can
that
be.
is if you qualify. It can be
Yeah, that
deducted.
yeah, it can be deducted once you qualify.
All right, sure. Okay, so I think that that question is also answered. Um, and then how do you apply for the reliefs?
Okay, so there's a form that you have to fill. You can get that from the GRA website. You fill that form and then you send it to the GRA office. Yeah. And then once
Okay,
you send it, the lawyer also has to be aware that you've applied for that relief. So
okay,
yeah,
all right,
so you
sure.
talk with your employer and then the GRA.
Okay, all right, sure. Thank you very much. I think we can call it a day. We've had a very wonderful session. We've learned so much today, and I believe that all the people that participated in this webinar have sort of got some good financial advice that they can use to make their decisions going forward. Thank you so much, Anesi. Thank you, Crystal. Thank you, Enimwa. Thank you, Eunice, and then thank you, Enoch, for all the insights shared. We hope that everyone that joined us has got something good from this webinar. Thank you all for the time that you have also invested in this webinar, and I believe that going forward you can make good decisions. Like I said, you can get the African Observations app, which is available on the Play Store and then on the Apple on the App Store, where you get to see all the investment products that are available, whether it's stocks, mutual funds, fixed income, and all of that. So basically, the app helps you to make better financial decisions by giving you the information that you need. Thank you, everybody, for making it a point to join this webinar. It's been a pleasure hosting you all, and do have a lovely evening. Good night.
All
Thank
right.
you.
Thank
Thank
you,
you.
everyone.
Good
Have a wonderful
night.
evening.
Thanks.